Welcome back. Today is 12th of October. We are on a Wednesday. Time check 10:30 a.m. Eastern Standard Time or 10:30 p.m. Singapore Asia Time. Welcome back. Really happy to see all of you today. All getting ready for tomorrow's inflation data. That is the big data that's coming out tomorrow. And at the same time, tomorrow we're going to have our cozy live trading event, and that's dedicated to our spiking community. I really look forward to meeting all of you tomorrow. Make sure you guys show up on time and turn on your video cameras, and we're going to have a great time together. So before we start off, let's pay our greetings to those who have arrived. And let me just type in right over here. Well, come back. A big hello to Jay, Kelvin, Angel, Jacqueline, Hua Chen, Aries, Wilson, Anton, John, Manfred. Good to see all of you. Welcome back. And today is kind of like a warm up, entering into the earnings season. And I found the perfect article to get us really ready for day one of the earnings season that starts on this Friday. All right. So there's quite a number of things happening at the same time. Let me kind of check back with all of you. Number one, tomorrow will be the inflation data. It will be published around 8:30 a.m. Eastern Standard Time. That's on the Thursday. And then Sunday, we're going to witness the crowning of the Emperor of China. All right. So 9 of the top figures of the Communist Party will walk up and showcase to the world that will lead China for the next 5 years. That will be on Sunday itself. Then on Friday, so I kind of jump out on my sequence. Thursday is the inflation data. Friday is the day one of the peak earnings season, with the banks announcing their earnings, and followed by Saturday with a 1 day rest. Sunday there will be the big crowning ceremony of the Emperor of China, and then next Monday officially we start the really peak earnings season. All right, so quite a lot of things on our plate, and let's get ready for our article for today. Okay. So quite a number of you just joined as well. Hi to Ryan, CK, Ronnie, Hiram, May. Wow, May, long time no see. And Jeanette and Jeffrey. Okay, have you guys found your article of the day? And that's your homework each time we tune in to watch the YouTube live stream. All right, so I found mine, and I think it's really appropriate for us to kickstart this Friday's earnings season. All right, so with that, here we go. This is the article of the day. Beaten up bank stocks are entering third quarter earnings in miserable state. All right. So you must remember the headline will always kind of be like a bit like a clickbait, trying to get as many clicks as possible. So don't worry about the headline being too harsh and all that. So that's just the way it is. All right. So let me dive into how we go about, digesting such an article and pumping in the real data. All right. So let me just kind of zoom in a little bit more, and everyone can see really sharp. Here we go. We have JP Morgan Chase and Citigroup kick off the group's earnings season on Friday. Both are at 52-week lows. This is the message. All right. So is KeyCorp, Bank of America, Comerica, and PNC. So just some of these names here, you can already know that it's owned by our legendary investor, Warren Buffett, right? And of course, looking at the mention of it here, how do we go about positioning ourselves for the earnings? Now, there are a few things that run through my mind, and a very common question among traders go this way, all right? Hey, teacher, doesn't it make sense that when we have a rising interest rate environment, the banks will naturally make more money? The simple answer to that question is yes. But then, why are their stock prices trading at 52-week low? So this is the part that, many people kind of get confused and say, hey, something is not right here. In fact, many great stocks right now are at their low 52-week lows, without any fundamental change to the business, but more about a key shift of perception. There's so much fear right now about the rising interest rate environment that people are just pulling back. And of course, this boils down to one single keyword called recession. All right. So take note of all these names here. We're going to break them down. And especially Bank of America and Citigroup. And one more not shown up here. There's a US Bank Corp. All right. So we're going to go down right here. So the big banks in 2022, these guys are all down. All right. So that is the climate right now. Just we have to tide through it. Most importantly, 2023 earnings expectations are very low. Most of the major banks are trading at single digit multiples, well below their historic averages. So can you see how unbelievable this is? This is the price earning multiple, less than 10. Oh my gosh. I mean, this is like even worse than some of the Asian stocks, all right, trading at below 10. And these are really big, powerful banks in a high rise interest rate environment. They will make money, but unfortunately, their multiples got trashed. So for those of you who are like value investors, you are looking for a very low PE. That's it. This is your red box. So easy. Look at it. Beautiful red box, all trading below 10, right? But the question is this. You know it's cheap. Would you dare to buy it? So let me type this out. You know they are cheap. Would you buy? That's the question, right? So sometimes, depends on what is the philosophy or investment philosophy or thesis that you're working on. Many times, it's very easy for value investors to go out there and say, oh, I look for cheap things to buy. I buy them when I cheap. I say, yeah, now everything is cheap. Which one would you start buying? My question back to them, right? Because it's so cheap until it's so unbelievable that you don't even dare to buy. Excuse me. So, how many of you know what I'm talking about? Just make sure I get you guys on board on the conversation with me. If you know what I'm talking about, can you just say something right there on the live chat? All right. Let's hear from you. I think I'm drinking too much root beer. All right. Bargain price. Would you buy? Hey, lay long. Would you buy? So I see all your responses really positive, and Angel say, yeah, I do get what you're saying, teacher. Bargain prices and unbelievable cheap, and cheap is always a bargain. But the challenge is this: we recognize that they are cheap, but would you dare to buy? So thereby, this is the best lesson I can ever teach you guys, because many of the times the theory or the thesis or the philosophy, they sound so idealistic, so like wow, so fanciful, right? Especially to new traders, new investors. They say, wow, I can calculate this and can calculate that. I can find an intrinsic value. I can dare to go out there and buy. Not so simple. Today we have the lowest value climate in history. And with Jamie Dimon proclaiming that S&P potentially will drop another 20%, it is really rock bottom price right now. But you can see many of the golden hands or the insiders, they refuse to go in to buy, and they go on air on CNBC and say that, hey, cash is king. I'm holding on to my cash. I refuse to deploy. I'm just waiting. So that kind of poke into my memory to recall the fact that, I thought you guys are value investors. I thought you guys are fundamentalists looking for very, very cheap intrinsic value, and the market price is even trading below your intrinsic value, so that as the market goes up, you'll fulfill your real intrinsic value, thereby you make money. So, you have this conundrum, fear versus greed. But it's not an easy answer to which trading philosophy that you subscribe to. Again, some of you subscribe to the ideology of technical analysis, right? You look at charts. And the way I draw charts is not like a technician. The way I draw charts is very unique. It's my proprietary approach. And many of the technicians looking at the way I draw my red boxes say, they go, their eyes go big. I say, wow, how come we never study technical analysis like the way teacher is showing us? Because this is the common man approach. It's the easiest approach without looking at indicators, clean, don't get distracted. Rather than every day you're thinking, should I look at indicator 1, 2, 3, 4, 5? There are over 300 technical indicators out there on the planet. Which one would you want to believe in? And there are more than 200,000 insiders on Wall Street. Which one would you want to subscribe to? Right? So there are many ideologies out there. So I covered, number one, fundamental analysis. All right. And while I'm talking about fundamental analysis, I also covered into technical analysis. These are the two primary approaches to investing in the market. The third one, some of you, you might want to prefer looking at like what we call alerts analysis or news analysis. Just checking out the news, get the ideas, and then fire off the trade, which I'm doing on this 100-day stock market inspiration. Every day, I look for the most important news of the day, and from there, I dive in really deep, vertically down, and kind of look for trading opportunities. Now, that's one form of news analysis, but the backdrop of it all is we still need the backing of the insiders, even more so today. So crucial. Insiders don't come in, nothing will move. Nothing will move, all right? So there are many insiders right now, based on the data we have collected, they are sitting on cash. This is a reality check. They are just hoarding cash and cash and cash, lots of cash, waiting for the opportunity. Waiting for what? That simple sign of rebound, and then boom, they fully deploy again, all right? So this is the moment in time, if you kind of get confused and say, hey, teacher, everything I read in financial textbooks, and I visit the library, I visit the bookstore, I go to Amazon, I try to pick out as many ideas out there. You can have a wide range. You cannot run away from four things. Number one, fundamental analysis. Number two, technical analysis. Number three, news flow analysis. And number four, which is much more difficult to perform, is insider trading analysis. So these are your core primary four approaches. Other than that, you're just throwing darts. All right? So which one would you want to subscribe to? And I want to make use of this article to showcase why it is important to look at what the insiders are doing at this moment. And again, my style is at the end of breaking down this particular article, I'll fire off the trade. And those of you who are with me on the Don't Stop Believing trade notification, you will know exactly what I buy and how I fire off the trade and so on. Right? So for example, today I got one trade triggered, and that's Roku. We got a nice cheap price. The moment I got triggered, I placed a trail limit order, and then that's it. I got kicked out again. I just make like $7 profit. It's $7.74. All right. So this is the defense mechanism I put into place. Every time we get in, quickly deploy the trail limit and see how much lower it can go. So that's how we do in out. All right. I mean, is it time consuming? No, it's not really that time consuming. It's just that this is a test of how you assess the price. And many of you who are with me on the Don't Stop Believing Trade notification, you realize that I said like damn freaking ridiculous price point to buy and still get triggered. How many of you realize that? I went all out to bargain with the market makers. The price dropped, boom, got triggered. And it still got triggered. And the moment it got triggered, and you must be there and there at the opening bell, you will know straight away those cheap prices that got triggered, boom, straight away become profitable. But small profit, right? So that gives us enough sufficient room for us to quickly deploy a trail limit to protect the downside. All right. So we try to always get out with a break even. And our break even is really like, I mean, even like covering the commission. The commissions is really so cheap. So we try to do everything possible to squeeze it. So that is the framework that we're working on. Is there a name to this methodology? Yes. We call it money, otherwise known as fiat, F-I-A-T. So F for fundamental, I for insider, A for alerts, and T for technical. And based on this four-letter word, F-I-A-T, I devise the fiat methodology, all right? So let me take a look right now into these bank stocks, JP Morgan, Citigroup, KeyCorp, US Bank Corp, PNC. Now, how would I know which philosophy I want to subscribe to with regards to bank stocks? Let me tell you, there's one guy that's really the expert of banks, and I don't think anyone can surpass his record. And this is none other than Berkshire Hathaway, our superhero Warren Buffett. All right. So this is our data on Warren Buffett, and we kind of scroll down. This is our proprietary data. And when we come down this part here, we just have to look for the bank stocks. So we got right over here, Bank of America. And then you go down, American Express, kind of like a credit card, not treated like a bank. And then you go down some more, you have US Bank Corp. So let me just organize the data. So you have Bank of America, you have US Bank Corp, two guys already. And then I go down a little bit more. And then you have a Bank of New York Mellon. And then you have Citigroup. Okay? So the four that I mentioned, they were kind of covered in the article. Citigroup, US Bank Corp, and Bank of America. All right? So with that, we come back here and we say, are these names being mentioned? Yes. Citigroup, Bank of America. Let me just organize it like this, really nice. Citigroup, Bank of America, and US Bank Corp. All right? So straight away, I connect the dots this way, and it's really, really clean and easy for me. So I say, okay, I just have to focus, attack these three guys. Boom, boom, boom. Okay? So that's how I start connecting the dots. Because for every sector, every stock, there's always a lead investor. Someone who's like 50 years experience in the marketplace. I mean, I'm still building up my years of experience right now. I'm counting in 22 years. I started in year 2000. So it's really easy to calculate. 2022 minus 2000 is 22 years. And Warren Buffett is more than 50 years. He's twice my age. Not twice my age. Yeah, I think he's twice my age. I think so. And twice the experience. But the game of investing is this. If you can last as long as Warren Buffett, that kind of 50-year range, between 40 to 50 to 60 years, you will be a legend, no matter what. Because investing is about time. All right, so today I acknowledge I'm not like a legendary investor yet, but I know I persevere in the game. I already collected my 22 years of experience. I just collect another 28 years. There'll be 50 years of collective experience of doing exactly what I do every day, connecting the dots, and the record will speak for itself. All right, so I don't have to worry about, am I doing badly now, this quarter, next year, and all that. I know I'm staying in this game for a lifelong. Likewise, I encourage you should take on this approach. You stretch this period. Along the way, you collect your nuggets of wisdom, and the record and the track will speak for itself. All right, so you don't have to worry about it. That's how you're going to tie through this period. All right, so we're going to attack three guys: Citigroup, Bank of America, US Bank Corp. Here we go. We're going to start out with Citigroup. And this is the chart of Citigroup. All right. Kind of bottom left is 2020. Bottom right is where we are. And again, I want to highlight like this very important price, $40. We have hit the bottom for Citigroup to exactly the pandemic bottom of March 2020. Back then, it dropped even all the way down to $35. All right. So 40 versus 35, this is considered what? Freaking dirt cheap. How cheap is cheap? For 40 to travel up to 100% profit return, this is exactly what you're looking at. That's your $80 right there. That's 100% profit return. When all things go back to normal, this should be the actual price of Citigroup. All right? So how cheap it is? It is cheap. Is Warren Buffett holding on to it? Of course. He bought Citigroup below, way above $40. Let me prove it to you. So we go down to Citigroup, click on Citigroup on our data, right? What was his average price? Look over here, $61, $50. Today is trading at $40. He is red right now. All right, so it's very, very normal to face this rate. And is he taking a stop loss order of 5%, 10%, 15%? Nope. Because right now he's negative 18.75% on Citigroup. All right. So our attempt is to buy below Warren Buffett's price. Now today, if you are like virgin into Citigroup, congratulations, my friend. You are buying below the old man. You're buying $40 while he paid for $61. He paid for $49. Dirt cheap. Cheap until you cannot cheap already. and I suspect, by the time we go into middle of November, when we do the trade through the night, all right? And that's where all the data will be published. I think he's loading up on Citigroup. Let's take a bet on that. And I think $40 is really so cheap that we really scratch our head and ask, are we really worse than back then how pandemic started in March 2020? Holy moly. Okay, so you've seen that. First example. Second one, we're going to go after is we've gone through Citigroup, Bank of America, all right, BAC. Here we go. Same drawing, but not as bad as Citigroup, because if you look at the bottom price of March 2020, supposed to be at $20, right? Today is trading at $30, which is just a break below the 200-day simple moving average line, at the start of the pandemic, all right, when it broke through the $30 range, and I'm talking about right here, right? So what's the chance of this guy hitting 100%? No, it's not going to hit 100%. It will deliver for you $30 and then go to $50. All right? So this is like, that's about 66%, all right? Not 100%, 66%. To go back to his former glory, Citigroup is 100%, Bank of America is about 66%, right? The last candidate is US Bank Corp. I want to make sure I get the ticker symbol correct. Oops. US Bank Corp. Let me double check on the data. Okay, what is my US Bank Corp right here? USB. Okay, let's take a look at our ticker symbol USB. Hang on a second. Check this out. All right. So what was the latest of March 2020? $30. Right now, today, it has broken below the $40 line. Now it's trading at 39. And then the highest point is 70. All right. So if this guy is to go back to his former glory, he'll probably trade around $70. All right. Still not 100%. So of the three candidates, the only one that give us 100% is Citigroup. All right. Now, this is a very simple practitioner approach to just call a short selection. I've not done the detailed analysis. In all my YouTube live stream, I don't do detailed analysis, all right? Because in that short 30 to 40 minutes, not enough time for me to do that. Because typically I'll plow through on the data, on what the insiders are doing, then I make my firing of trades. But I give you a practitioner approach. Because how we started off today's call, do you subscribe to fundamental value investing, technical analysis, news analysis, or whatever thesis that you're working on? End of the day, right now you can see the multiples are so cheap. Would you dare to buy? Right? So you can be so fascinated with all the ideologies out there, but you don't dare to pull the trigger. That says for yourself. So I want to show you the easiest approach to look at a low multiple environment for banking stocks that will kick off on this Friday. And for those of you who come on our cozy live trading event tomorrow, then you get to see how I'm going to fire off for the Friday's banking stock. Typically, for those of you who are not coming and watch on recorded video, you will be behind time. You will not be able to fire off the trade like us, all right? So typically, most of our cozy live trading event, we are very, very happy doing the trades. Okay, so thank you very, very much for joining me here tonight. I look forward to seeing you guys tomorrow. Make sure you apply the knowledge that you have been taught today. Thank you, and may God bless you. Goodbye, everybody.